If you're looking for an undiscovered small cap company that's generated over $50 million US in revenue in the past year and a half, then look no further than Zefiro Methane that trades in Canada, ZEFI for friends in the US, ZEFIF. Now, for those of you to the story, one of the biggest threats to climate isn't just CO2, but something around 85 times more lethal, and that's methane. And it's leaking from at least over 2.2 million abandoned oil and gas wells in the United States alone, with the EPA believing it may be 3 times higher than that. Cleaning up these wells represents a $435 billion market opportunity in addition to helping save the climate. Enter Zefiro Methane, one of the few companies that are plugging old wells and turning the methane problem into a multi-million-dollar revenue stream and more than just lip service. Last fiscal year, for the year ended June 30th, $33 million in revenue. I'm rounding up there just a little bit. And Q1 and Q2 this year, another 17.5 million just for the first half of the year. You add that up, and you talk about $50 million US in revenue alone. Their customers, you wouldn't know the name, but include some really big organizations with over $100 billion in revenue: Mercura Energy America, EDF Trading, which is a subsidiary of EDF Group. Very big customers, and the company is executing. Here is Talal Debs, the CEO, to tell us more about the company. Talal, welcome to Agoracom, my friend.
Thank you for having me.
So, methane. It's often called the invisible climate threat because a lot of us, like me, we really didn't know it was a problem until I met Zefiro. Before we dive deep into your business, tell everyone at home, how big of a problem are you solving, and why do so few people know that they even need to fix this problem?
Well, look, I think the reason people don't know why it needs to be fixed is that methane's an invisible gas, and you won't really notice it just by driving by or walking by. But millions of these leaky sites are within less than a mile of where people live, and they're
Wow.
starting to realize this. And look, how big is the problem? The problem is, you mentioned one number, hundreds of billions of dollars of cleanup cost, but the actual problem, the methane problem itself, the costs that it causes to the environment, to health, to the oil and gas industry, if it's not cleaned up in a early, so the costs don't get out of control, it goes to the billions. And recently, I was talking to an investor who said, you know, can you put $2 billion to work to clean up this stuff? And the answer is we certainly can. And we're building the first institutional grade pure play framework where we can do that. Now, $50 million is great, but where we need to be is 10 times that size to really start to address this at a level where you can start to feel it in the society. But we're on our way there at the growth rate we're at.
I mean, $50 million a year and a half, essentially 6 quarters of work. There are small cap companies who would die to do that for, years, let alone 6 quarters. Now, in layman's terms, now people at home are probably thinking, hold on here. What do you mean all these wells just leaking? How does that happen? In layman's terms, explain to everyone, how this happened, why these wells leak, and then how do you solve it? How do you guys come in to save the day? But first, how do we even get the problem? How did it come up?
So the problem came up because when oil and gas exploration and production companies are done with getting a well produced, they've got the option to take their next dollar and spend it on really anything. But drilling a new well comes to the top of the list for obvious reasons. Cleaning up the one that's now, if you like, kicked and no longer has any hydrocarbons to produce always falls to the bottom of the priority list. And it's really nothing. It's nothing great and nefarious, but systematically over the years, it's resulted in millions of idle wells that have never been cleaned up. And why do they leak? It's in the nature of physical equipment that if you don't repair it, it's out in the elements. Eventually it'll corrode, it'll leak, and it'll start leaking. And I think people forget about them. And very often for orphan wells, the 2.2 million you referenced before, those don't belong to anyone anymore. So there's not even an owner that's checking on them. They are completely sort of left behind. And so you got millions of sites. No one's checking on them. Some of them are decades old. and eventually they will succumb to the elements and just start to leak methane into the atmosphere.
I was about to say a lot of these are potentially, George Com Drilling, some drilling company in some part of in Pennsylvania or Texas 50 years ago. The EPA wasn't as strong. There wasn't as much climate change activism going on. There wasn't as much regulation. So Georgia kind of sucked all the oil it could out of it. It's done. I put I kind of cleaned it up, move on, and then I forget about it, and that thing starts to erode, and hence this presents you guys with a bad problem for the earth, but a great problem for Zefiro to clean up.
That's right.
So many companies are using climate change as a buzzword, but you're actually walking the walk because we talked about your incredible revenue growth. So now let's talk about your business model. How are you actually generating revenues? Now we could, of course, we can probably all visualize. Generally speaking, you go to these wells and you somehow fix them. But how do you do that? And who are your customers?
Right. So the best way that I can explain it, and this kind of demystifies it a bit, is we do the same service for every client we serve. And that is we have trained teams, very experienced teams, over 50 years of on the ground experience, actually. And those teams go into a site, they make sure it's safe to go in there because sometimes it's not. It might be poison, H2S or other noxious gases. Get on site, they put their rig in place, and it takes anywhere from a couple days to much longer, depending on how old and damaged that well is. But when they're done, the well has a sort of double plug, so a redundant a first layer plug and a redundancy plug. It's been signed off by all the local regulatory authorities in whatever jurisdiction we're in, and the casing, which is all the metal and evidence that there was ever a well, is not going to be evident from the surface. And in fact, we dig down and we take it out deep enough so that you could dig the foundation of a new building and you wouldn't even know it was there. And so,
Wow.
no, I'm not saying you should, but very often these are in places that are not going to be developed. They're in a forest, they're in someone's backyard, they're in a churchyard, and those are real examples. And so we leave, and the land is restored to whatever use the owner wants to put it to.
Now, who's your customer? Because one interesting thing you said is a lot of these are abandoned, no one even owns them anymore. So who's calling you up? Is George calling you up because I've got a house and somehow I discover a methane, an abandoned well in the back that's leaking methane, or is it something more structural? How
Sure.
do you acquire your customers? Because it's a big problem, but who who calls Ghostbusters?
So the reason, yeah, we even at one point considered calling ourselves methane busters, but
I didn't
for
know
that
that, right?
reason.
I did not
Yeah.
know that, so I just kind of said that. It's amazing we're thinking the same way.
Yeah. So the answer is, look, we've got a core business, which is what I really would like investors to understand is we have a core business that is most of what you see today in the rearview mirror is coming from two main sources, coming from exploration and production companies, E&P companies that are being required by their regulators
Right.
to plug wells before they can drill new wells. And that's that's the regulatory infrastructure working at the pace that it does. Now, that pace is nowhere near enough to keep up with the backlog, but it still is a lot of wells. And we want to be involved and want to be leading that market because it keeps our quality and our prices right in line with best market practice. We're not, we're part of the services economy that supports the whole economy. We're not just off in one corner working on some environmental product that's theoretical. So we have
Right.
that bedrock of corporate business. In addition to that, we have government work, which is, in the US, there were $4.7 billion granted to the Department of Interior to distribute to the US states for this problem of orphan wells. And so that's exactly what you referred to. That's wells where there isn't anyone really around to clean them up, and there isn't funds for it. And so government is our second source, and those monies, were approved under the last administration and are flowing again under this administration. I get a lot of questions sometimes if it was part of a prior administration, was it shut off? And the answer is absolutely not. The industry knows this is needed. the local communities knows it's needed, and it's already been continuing to roll out. And then our third kind of revenue stream is where we're really getting creative, and these are the environmental contracts that we're pioneering with visionary buyers like Mercuria, which you mentioned, or EDF, which is the trading arm of the French National Sovereign Energy Company. And those companies know that to be global players, they have to reduce their carbon footprint. They have to reduce their carbon intensity. In many cases, they have to be net zero or meet other standards. And so they're used to buying credits that represent kind of the proof of work that
Right.
that we cleaned up these assets and we stopped those methane leaks on their behalf. So they pay for it. We give them the certification that they did, and then we can just plug more and more wells. So those are our
Wow.
three different revenue sources.
Okay, I love that one. I'm going to touch that in a second. I want to go back to the second one with the state and federal contracts first. So I was actually going to ask you the same question. Could that $4.7 billion allocated under the Biden administration get doged? But it sounds like that's a no because I guess it's a real it's a real contract for real work. So that's good to know. But how do you get those? So Talal, here's George Com methane, and maybe I'm a competitor of yours. So why is a state or a federal contract? How are you guys differentiating yourselves? And are you the leaders in this space right now? How are you guys differentiating yourselves so that you guys win that contract versus George Com methane?
Sure. So we do, there are competitors, and you're right, it's like any government bidding process. It's a competitive bid. It's open data. You can go and see if you know where to look, where people are bidding. What you'll find if you look at the bidding is that there are very few companies of our scale that would even bid on this work. So what tends to happen is in a given year with a given allocation to, say, Pennsylvania has $80 million to deploy this year. I think that's roughly the number. And, they're going to auction that off in small segments over the year. And what we find is like, the mom and pop shops generally have, will underbid everyone. They want to secure the business. They have very low overhead, but there's only so many of them, and they tend to get filled up on the first one or two auctions.
Right.
And then you get to the more professional outfits, and we are the largest pure play well site remediation business in North America. There are some other oil field service companies that are out there that mostly do oil field services, but they also have some plugging services like us. They compete with us. They might have a fleet that's very competitive to our scale, but since we're a pure play, we can actually really drill down and get the best unit cost because it's all we do. And we're very well known in the market for very high quality because, again, it's all we do. And we're from senior management down to the people on the rig, we're highly focused on delivering highest quality for lowest cost.
And even then, Talal, for everybody at home, are you overly concerned about competition? Because this problem is so big. I said 2.2 million orphan wells at the beginning there, that there's enough for everyone to go around because even if you had a fantastic year, how many wells would you be able to remediate in a given year? If you had everything go right for you in 2025, how many could you fix in one year right
Yeah, with
now?
our current footprint, and depending on the well sites, we might be able to get over 1,000 wells in a year. But we want to be at routinely doing 5,000 wells a year. So we need to be 10 times our current size and a much higher rig utilization, which is why we're expanding to other areas of the country because, in the Northeast where our focus is, there's a couple months a year that, we're really shut in because of the weather.
Yeah. But even then, even at 5,000, if and when you get to that point, there's 2.2 million. So the great news here is even if you have some competition, there's more than enough to go around for you guys to be busy all year long and really generate some great revenue. So let's talk about that. I'll tie in the third kind of contracts that you're talking about with, because my next question was, let's talk about growth, market size, and what are the catalysts. So we know it's a huge market, 2.2 million wells, hundreds of $1 billion. So we got that. How are you planning to get from 50 million to 500 million. And I'm really interested to hear about that third revenue stream where you have these big energy companies that need to be net zero, get carbon credits, and they're hiring you to say, hey, we can't buy enough of them out there. We want you to go out there and we'll pay you to go fix a bunch of wells. Let's talk about that as a catalyst and other catalysts that'll get you from, from 50 million to 500 million.
Sure. So to get to that scale, we need to aggressively grow all three of those revenue lines that I mentioned. The nice thing about those three revenue lines, which is corporate business, government business, and the emission market business. You could say carbon credits, but that's a little too narrow. It's really the methane abatement market. And those three lines of business each need to grow. They're going to grow at different rates in different years because there's different drivers for those businesses, but they're not correlated, which is what I love as a former banker. I love to see uncorrelated, profitable revenue streams. And our goal is to be achieving 20% annualized returns or greater in each of those revenue lines. And we're doing that already in the corporate side. I think the government side is there was a pause due to the election, so I expect that to ramp up and be pulling its fair share very soon. And then the carbon markets are just getting started. And as I mentioned, the appetite for abatement units, methane abatement units, really does run to the hundreds of billions of dollars of cost, but also in terms of the credit level, billions of tons need to trade in the coming years.
You don't have any concern. I mean, you almost make it sound so easy that I want to go launch a company to compete with you, but it's not that easy. So let's talk a little bit about the risks, like what risk might be in front of you. But it seems like there's a ton of blue sky. You've got the process in place. You've got all three revenue streams. So it seems like you've got some really clear sky in front of you, but no company has an unabated road in front of them. So what are the risk factors for you? What could stump your growth, or what could lead to you not hitting your goals?
Sure. No, I mean, I appreciate that very much. And I think, we do have competitors out there. I was on a panel sponsored by my old company, JP Morgan Chase in Fort Worth last week. And it was all about using the carbon markets to fund the orphan well problem, which I think is amazing because, this is something that we were talking about 2-3 years ago. Now it's hitting kind of the prime time of the smart money. And on that panel, there's other people who are doing parts of what we do. But what is our strength is that we're fully integrated. We acquired a business and we've redirected it, repurposed it to this mission that was a 50-year services business with a great track record, great safety record. And to me, the biggest risk in there is you do a bad plugging job and someone gets hurt or the environment or it ends up leaking again. That's where we spent the last couple of years, making sure we have every piece of vertically integrated equipment so that we don't have to rely on anyone but our teams, our equipment that we're responsible for. A lot of other folks who are trying to tackle the carbon market side of things are outsourcing to rig companies. We feel like you can't really control the risks unless you own it, you control your own teams, you train your own teams, and ultimately they know that they can get fired if they don't do the right thing. And so we all are kind of locked together in that mission because we're one team. So, but how do you risk manage this? The big risk that we look out for is growing too quickly. A business like ours that has a lot of complexity, we're hiring teams, we're buying new equipment, and we want to stay safe. And there's only a certain rate at which we can train new foremen to lead a rig in the field. There's only a certain rate at which we can redeploy capital and get it in the field without becoming a victim of our own success, growing too quickly, and then finding that we needed that liquidity for an acquisition or what have you. So I think one of the things we're focused on is healthy growth within the zone that I talked about, which is sort of by business line. We want to be growing hell or high water, kind of 20% annualized per year. And that's going to get us to where we need to go without taking too much risk.
And you took the words again. We don't collaborate on the questions in advance because my next devil's advocate question was: you're active in 6 states with plans to expand across Appalachia and the South Central U.S. But how do you scale given it's so manual, right? That was the one thing I thought, which is okay, great business, but you can't just go hire me and my buddies for this. These are highly specialized, trained people. So that explains a lot. Is technology? I saw a great presentation from your chief technology officer yesterday. Uh, Talk to us a little bit about how you're using satellite technology, mobile app phones, because you think this would not be a business for that, but you've integrated it. How is technology helping you really accelerate your business and dominate your industry even more than you already do?
Well, look, I'm glad you asked. It is something we spend a lot of time on. We think we're leaders in this. We know we are actually. When we bid on work for government contracts, we're often told that we have tools on the information technology side of things that no one else has. And those tools involve things like when we're surveying for well sites to see which ones are the most leaky. We have full data on each operator, real time, where they are, what they're doing, what their detection device is saying, without having to rely on human input. Now, we also have full audit chain for, is it fictitious name, but is it Joe out there in the field who's measuring this one? And before the measurement takes place, we can see, was the machine calibrated? Is it on the right repair schedule? So all that data is now sitting in our cloud through what we call the Zefiro Lifecycle solution. And that the access to that infrastructure is available by an app on your iPhone or on an Android. And so we make it very user friendly for our operators to stay right on top of the full workflow for everything we do. And then the great thing about that is we're able to take that data and combine it with data that we scraped from public sources, from the recent satellites that have gone up to measure for methane leaks, and then also from there's a handful of really innovative companies that are doing drone flyovers and specialized measurements to try to detect methane leaks because everyone's realizing this problem is real. We can consume, and we do consume, all that data, and where we're applying AI, which is it's a bit of a buzzword, but it's a really obvious AI application to be able to generate a model, which we now have, of all 2.2 million or 3.7 million orphan wells, depending which number you go with, and where we can make an estimate, and we have an estimate of how much is that well going to cost to clean up, and how much methane is it leaking. And that is what AI is helping us to do. And we're already finding that there's actionable intelligence, even though we're not yet to full production mode on that. And then how does it help our plugging logistics? Look, one of the best ways to lose money in these services, well, the first way to lose money is if you don't do a good job. The second, which we were focused on doing the best job. Another way to lose money is you don't do a good job optimizing and scheduling your teams. You have a rig sitting idle for a week when it could have been plugging some wells. You don't want that. So our IT infrastructure build out will include, full fleet management of the entire fleet, and will help us increasingly be able to stage and position our workers to get rig utilization up across all these territories. And in a way, a lot of the companies that we look at acquiring are privately owned, uh, what sometimes might be referred to as a mom and pop business. They haven't had the luxury of a data overlay like this. And it's
You
something that
never
we bring
going
to the
to.
table, right? Yeah. And so we can bring that to the table as part of the deal where they can get more out of their equipment. And we're happy to have them on our platform because we like their experience and what we want them to focus on cleaning up the site safely. And we want to take that logistics layer off of them using modern information tools.
And that's so powerful because most M&A models are just go out there acquire as much as you can, pay whatever you have to pay, and hopefully you outgrow the cost of acquiring. And so many times those fall apart because they just get overly leveraged, they borrow too much money, and they fall apart. I mean, there's a Netflix documentary on someone trying to do that with funeral home, so it can happen. But what I love about what you're doing, Talal, is you're coming to GeorgeCom, a nice family business, saying, guys, listen, you don't have, and you probably won't have the efficiencies that we've created with satellites, drones, AI technology in the field. I love the fact that from the field, you've made it easy with an app because you're in the middle of nowhere. Paperwork is going to get very inefficient if someone has to fill in a spreadsheet or something, and you're doing it all app based. So, how powerful of a tool is that when you approach GeorgeCom and say, listen, you guys have had a great little business here for 10, 15 years, whatever the case may be, come into the Zefiro fold and we can make you guys even more efficient, and together we can grow the company and the stock. How powerful of a weapon is that for you, Talal, to grow the company?
Well, so far, I think it's really given, we partner with the companies that we've acquired, and we spend a long time making sure it's a match both ways. I would point out that our principal subsidiary, Plans and Goodwin, is currently run day to day by our head of environmental services, Luke Plants. He's the grandson of the founder. And so we want to keep the DNA of the teams that built this business in their seats, driving growth. But why did they get excited about us? Because they believe in what they're doing. They live in these communities. They know this cleanup needs to happen. And they also see that we can give them a reach and a scope and a capital access that sitting there as a privately held company was going to be limiting to their ability to really tackle the problem. So, what we're trying to do is not, we do have a roll up sort of strategy as part of our growth strategy. We buy businesses and we acquire them, but really the pie is just getting bigger. We're rolling up some businesses, but we want the whole sector of end of life services to be 2 or 3 times its current size when we're done. And the market can definitely absorb that. And so that it's a virtuous situation where we've got the opportunity to grab a bigger and bigger piece of a pie that's getting bigger and bigger.
I don't know if you watch the show Landman or not. I do. I'm sure a lot of people who are watching this probably watch Landman. It sounds like I'm watching. It sounds like I'm talking to Billy Bob Thornton right now because of the way you're describing the business and all the elements of it. And you got to find a way to get Zefiro's got to find a way to get onto Landman as a little
Well, the
uh
funny thing is we deal with landmen all the time. We're very much in the same vein. And I don't have time to watch movies right now because we're driving the business. But absolutely, we think there is, if you like, a land grab opportunity to do billions of dollars of work cleaning up the physical communities we're in here in North America, so that not only do we benefit from cleaner air, but you've got somewhere between a sixth and an eighth of the usable land that's around us has oil wells on it, like, within some radius. And, if we want to really, as the current administration is really focused on investing in the US and bringing jobs here, many of those sites that, people think are vacant have wells on them. And in fact, we've gotten called in multiple times in recent months by some very recognizable names that are kind of one of the leading packaged goods delivery companies in the world. Some leading players within aerospace and defense. And they've got some big facility they need to put in place very fast, and they want a permanent seal on a well they found on their building site. So they call us, and we can guarantee that work. We do very high quality and we move quickly. So just to give you a sense that we need to clean this up so that we can deploy capital into other industries as well.
Well, and it makes sense, and then I'll hop on my last question. But it makes sense that if there was a time when there was a massive land grab opportunity in order to drill the land, take out the oil and gas, get those wells in the ground, then it's completely logical that now there's a massive land grab opportunity to go back to those same wells and fix them once and for all. So
You nailed it.
it's beautiful. It's last question. Management. Look, it's very few companies are able to do 50 million US dollar in revenue in 6 quarters, so a year and a half, right? And that didn't come by accident. You're one of the most talented management groups out there. And I don't want you to be, I know you don't want to brag or whatever, but at the same time, I think it's really important for the world to understand, what's the pedigree of the management team. You kind of alluded to being a banker in the past. Can you talk to everybody about the strength of your bench? Because that really matters in these businesses, right? It can't just be a bunch of entrepreneurs. It can be, but it's even better when you have the pedigree of Zefiro. So if you don't mind, touch on that a little bit before we sign off for everybody.
Well, I'd love to talk about my team. Our team is a remarkable group of people, and I would say they're a team that the Zefiro investor base ought not to be able to afford. A lot of people are sort of taking pay cuts to be here. Um, we are oriented towards equity, and why? Because the opportunity cost for our team is to go be number one or number two at a major global bank in the finance department. I'm speaking of Mohit Gupta, who just came from a number two slot under the CFO of Wells Fargo globally. You got
Wow.
Catherine Flax on our board, who used to run fixed income currencies and commodities for BNP Paribas. You've got, and she not only is on our board, but is very involved with our environmental markets business because under her guidance at JP Morgan, I had a role in helping put JP Morgan's first carbon trading desk in place. And then who else is on our team? Richard Walker. He's our chief technology officer and chief information officer. Richard comes from 20 years plus at the partner level at big management consulting firms like Deloitte and Bain, where he's been dealing with the forefront of financial technologies as it meets the world of finance. So, this is everything, from getting the right data at the right time, but also in a very secure way, in a way that's very auditable for regulators. So he is a rock star as well. And so, well, why are all these people who, could be somewhere else, working to help us build Zefiro? It's because of something you said earlier in the call. It's kind of hard to believe. We sometimes wake up and don't believe it ourselves that at Zefiro, we are running down a track towards multi tens of billions of dollars of opportunity, and we're the front runner. And there's no incumbent. There are adjacent people who will eventually catch up with us, but since we're a pure play, we're the ones who can chase after this with everything we've got. And so we're all seasoned enough to know these kind of opportunities, don't come. You might live a whole life and not get one. These don't even come around once in a lifetime. And so I think it's a great opportunity. I love your image of the land grab. And then as for our operating team, Luke Plants, 50 years of family experience in the field, managing teams, and before that, an Army officer in a tank division. So you can't ask for a better leader of men on the ground where the stakes of getting it right are high and need to be managed. And so we really have a stellar team, and I expect we'll be adding to that team as we go. And as for myself, I was I'll end with this. My job at JP Morgan, and I do have a 25-year more JP Morgan clock somewhere, and JP Morgan really formed the way that I think about finance and business. And it was, the phrase first class business in a first class way sometimes gets bandied around, but it is really true. I mean, we all learned, those of us who are heritage JP Morgan, which is almost the whole management team, we all learned how to, that just because something might not be your immediate responsibility, it's still your responsibility to look beyond, to help the people who report to you, to help the people who are side by side with you in their responsibilities. And, Jamie Dimon is a remarkable leader. And whatever you may think of him, you know, I've got the utmost respect because he really built a bank that has a culture that has lasted through into Zefiro and what we're doing. And I'll say that one of the reasons that we've been able to sell carbon offsets to investment grade buyers, it has got to be related to that they look at us
100%.
and they realize that when we say we're going to deliver, yes, we're going to give them all the evidence. Yes, we're going to give them a good contract and lots of remedies and all the bells and whistles. But fundamentally, they're looking at us and know that if anyone can perform on this, we will.
Three things there, Talal, I'll say. One, Jamie Dimon is Greek, so he's got my backing all the way. Two, I've been doing this for 27 years, and I got to tell you, I've seen fantastic management teams in the small cap space, but they're trying to find the right product. And I've had companies who had unbelievable product or projects, but didn't quite have the management team. And you've combined both. So that for me, I can say this for all my clients to hear, both current and past. You guys are in the 99th percentile of a package between management and the actual operating business and what you're achieving already. That's unbelievable. And third, you've got the problem, you've got the solution, you've got the customers, and you got the growth catalysts, and you have the team. So you're that five tool. You know, if you're a baseball team, you're a five tool guy. So I love the fact that you came on to talk to everybody about Zefiro. It's going to be a very exciting company to watch in the next 2, 3, 4, 5 years. I don't know what your plans are. If at some point you make an exit or you just keep building this thing for the next 15, 20 years, because the opportunity is probably going to long outlast our lives. But whatever you're going to do, it's going to be exciting to watch. And I'll leave the last word to you before we sign off. But I just wanted to let everyone know that's how I feel about Zefiro.
Well, thank you for that. And look, how I feel about our investors is they're the ones that are providing the fuel to make this go. And we're very thankful for your platform for giving us a chance to get more people on board with this journey. And as far as 5 years from now, I think we'll be 10 times our current size, but I think we'll have another 10x in front of us. And so your guess is as good as mine as to whether I'm going to want to leave.
Well, listen, if you got a good thing going, Warren Buffett never left, right? He's still there. It's not like he needs the money. He's there because he's got a good thing going. Why would you leave? And I agree with that. But I hope we're going to take the journey with you. I hope a lot of your shareholders are going to take the journey with you. And I hope a lot of new people watching are going to take the time. They've heard or they've watched, whether they've been listening on Spotify or watching on YouTube. They've got fantastic information about you. And my suggestion to everyone at home is do your due diligence, get to the Zefiro website, go get to Agoracom, ask any questions you might have, make inquiries at the company, because this is a real great company with all the right things in place. And it behooves you, if you're a small cap investor, like I said at the beginning, if you look for an undiscovered small cap company that's generating $50 million in revenues in just a year and a half, then look no further than Zefiro. Thanks for joining us, everyone. Talal, thanks for joining us. For everyone at home, whether you've been watching on YouTube or listening on Spotify, thanks for joining us. Have a great day. Do your due diligence. Put Zefiro on the watch list. See you next time.
See you next time, George.
Hey, small cap fam. I hope you loved this interview because more than a dozen people were involved in its production for the sole purpose of making you happy. If so, can you take a moment to support both our awesome guest company and Agoracom? Your engagement means the world to us. First, if you enjoyed this video, give us a thumbs up by tapping that like button. It's a small gesture that helps this interview reach even more potential investors to discover today's guest. Second, we would love to hear your feedback on this interview, so please leave a comment below. Be sure to keep it clean, but feel free to poke fun at George. If you loved what you heard on today's video and want to dig into our guest company right away, take a look at the links in the description below. And while you're at it, hit that subscribe button and ring the notification bell to never miss another great Agoracom small cap video. Thank you so much. We couldn't do any of this without you. Make sure to come back soon.